Hey everybody, it's Michael Robbins. Early morning on August 3rd, and we've been tracking the COVID markets and what everybody's saying about it. And it's uh, it's still a mix of bulls and bears. One headline: the stock market could be facing multiple decades of deleterious economic after effects, analysts warn. But before having a look at that, we'll see where we are and where we've been. The COVID epidemic has been showing some signs of a second wave globally. Um, Seeing some lockdowns of places that kind of thought were all through it, but no effect on the markets yet. See, after we had their major March decline, things have been marching upward. I mean, the S&P is still short of its highs, but if you look at Nasdaq, it's an amazing chart. And what we're what we're gonna find out is if in a couple years from now, um, why weren't why weren't analysts able to make sense of it and have some consensus? Look at this Nasdaq roaring back after that initial dip. So here we are over on Market Watch. Uh, the stock market's ability to shrug off the economic destruction and gloomy coronavirus headlines. And this is a really interesting factor of this. Uh, is there a disconnect between the headlines and reality that Wall Street understands better? Um, Continues to enrich and embolden bulls and, and baffle some pros. So, not a great deal in here, but there was another rather bearish piece on Market Watch. Um, he's got a quote in here: investors are being infantilized by the relentless the Fed activity, and um, yeah, seeing investors like foolish children. And I could see how the the government's impact on markets and flooding it with cash would feel like that. Um, there was another piece. Oh, I think it's here. No, this was a let's just scroll down here. Some interesting comments about that, about his piece. Um, there was also a link somewhere about a coin shortage and the U.S. Mint asking people to, get their change back into banks, kiosks, whatever. Oh, here it is. U.S. Mint asked help for getting coins back in circulation. I can't remember ever hearing this as a problem. And it's uh, as a result of COVID and people using less physical change. Anyway, I thought that was kind of interesting. Um, Here's a good one over on CNBC. And in previous episodes, we have looked at charts like this, but this is pretty current, going up to August here. So um, public transit is still down 50%, at least from those search requests. Restaurant bookings is very interesting here. Just that it's that volatile. I don't think the others are. Yeah, you've got a much more smooth line for hotel occupancy rate. Um, so yeah, it's It's not doing too bad. It's not doing too bad. This could go into the bullish category. Not so much with air travel, as you can see. It's uh, it's pretty bumpy, like the restaurants not knowing where to go. Home purchases. Look at this. Um, and what we've heard before is some saying that this was um, basically demand that wasn't met here moved over here, and that volume and prices are going to contract. Uh, we get to see who's right on that. All right, I think that was it for CNBC. Right, yeah. So Seeking Alpha had this kind of bearish take about the stocks being just like sent up through the stratosphere, and trying to make a case that we're in another bubble. Um, some of the evidence is more compelling than others. Um, this one I thought was pretty cool. Looking at a ratio of the Wilshire 5000 as a stock index. So comparing the valuation of that basket of stocks to the GDP. And as you can see, it's not really at a massive record, right? It was up around this level. Oh, right. In 2000. Yeah. So that's obviously what his case is for his bull market. Yeah, real fascinating one. So yeah, this was the crash from early 2000, and what this is probably the real estate crash. Yeah, 2007, 2008. Um, this, of course, right, is a major downturn, and yeah, unenviable future returns. Um, this was pretty interesting too. 3 months change in money supply as a percentage of GDP, saying U.S. and Japan are leveraging their international credibility to the hilt. Um, so GMO, I looked at them a little bit. I hadn't heard of them before, so I don't have a comment really on the veracity of these projections here, but um, it's interesting to see. There was another piece showing that some junk bonds did pretty well, though I'm not seeing emerging debt is a little better, but emerging value, um, kind of like basic business, basic industry, which actually I'm working on a grocery store in the Caribbean right now, which would probably qualify as the emerging value play. There's a tech component, right, that wouldn't necessarily be associated with a value stock, um, but yeah, it could, just depending on the price. And anyway, it was kind of funny then to come down like, oh, okay, this is an article from this guy who calls himself the Contrarian, and um, yeah, if the markets keep going like it's going, this will look just like kind of silly fear mongering. And if there was a more substantial adjustment, as we see here, like it's interesting. Might want to look more at that. Okay, moving on thought Barron's had a couple interesting things. Oh, just this chart. Oh, I hope it's still there. Right. Percentage change scale to align with real GDP growth. And what I thought was interesting about this is that very, very strong recovery, and then boop. It seems to be the first time there's been a decline here since initially. Is this a sign of changes ahead, or will things march up from there? Time will tell. And back over on the Financial Times. Oh, I thought, yeah, U.S. junk bonds. We covered that in a previous episode too. That's been an exciting area. Good to see the carbon credits are still a viable thing. But all right, maybe we'll hit that right. Okay. The Anatomy of, I haven't read this yet. The Anatomy of a Very Brief Bear Market, and I'm not a subscriber, so we'll never know. All right. Well, I think that will be a wrap. I'll find any of these other great quotes. You know, I think we missed the actual, yeah, this is the big time bull here. Be wary of cashing in. And this guy saying, oh, the train is just leaving the station. But there's a great quote in here. Something to that effect, that don't cash out yet. The horses have just begun this race. And don't cash in your winning trifecta super ticket. So, yeah, very mixed messages, very impassioned messages, and we shall see. Hindsight was 2020.